Welcome to this edition of Bitcoin Brief. This is Tuesday, June 16th. And on the program, we've got a full roster. We have Tone Vays, our Bitcoin educator and trader. We have Jimmy Song out there in the beautiful wild of Colorado and our Bitcoin programmer. And we have Rodolfo Novak, CEO of CoinKite. Hey, you guys, and I'm Christine Lee, New York-based journalist. So we've got a busy day, a lot of stories, at least from what I'm looking at. The markets have been rallying. Trump is going to propose a $1 trillion infrastructure plan, sign some police reform executive order, and we've got a good retail sales report out this morning. How are things on your end, Tone?
Yeah, lots of economic news. The market's really pumped yesterday. Probably on the back of the Fed announcement that they're going to start buying corporate bonds, which in a way seems very crazy to people, but technically that's how the Fed was created. That was the primary and the only job of the Fed back in 1913 when it was created. Probably a story for another time as we dig into it. But yeah, another day. Let's get the news brief out in the morning, and I'll try to cover some price analysis after. If not, the price show will come later tonight.
Jimmy, how are things with you?
Well, I'm on vacation, so this is kind of all new. But yeah, it's nice to do the morning brief again. This show used to be called the Bitcoin Morning Brief.
That's right.
Now we're we've been doing it in the evenings and so on, but we're actually in the morning, so that's great. I would like to comment on what Tone said. They're not just buying corporate bonds, but they're asking for comments on providing large loans to nonprofits. I don't know what collateral nonprofits have, but that's going to be real interesting. I mean, like pledges or something, right? Like what the hell do you loan against?
I don't know. That's a good question. I wasn't even up to date on that one, but I'll have to think about it.
Rodolfo, how are things on your end?
Oh, but being busy, kid, weather's getting better here in Toronto finally. Watching the world burn down. It's been an interesting month.
Oh yeah, here I got Rodolfo's products right here. I'm wearing his hat, Open Dime, an original ColdCard still in its.
Those are all collectible.
And this one is funny. This is from the first unconfiscatable poker tournament where I finished in 9th place.
Wow.
So if anyone ever robs my house, there was, I think, 0.1 Bitcoin sitting on this from my 9th place finish.
You didn't cash that out? I cashed mine out. For beating Duck Polk, I got like 0.1 or something. I cashed it out right away, man.
No. This is a collectible, man. It's a collectible.
It is a collectible now. Yeah. It doesn't hurt to unseal and make a backup just in case, but...
Yeah, Rodolfo, can we get clicky buttons back? Because I really don't like the touch buttons on the newer ones. Can we get the...
Oh, no, it is clicky buttons. All the ColdCards are clicky buttons.
We have a ColdCard firmware update that Rodolfo, can you walk us through this tweet?
Okay, so we've released, it's actually 3.1.6 now. But by the time we released the update was we had a few more patches. So there was a known attack on Bitcoin 43, and it could allow you to merge essentially enabled you to merge two signatures from two SegWit signatures to make a new transaction where you could send the funds to a change address. Essentially, you could try to steal the change, but you'd have to be a miner or do sort of like a griefing attack where you sort of like threaten to send it to the miners. Anyways, so what's interesting is this attack had some issues with irresponsible disclosure. And we've sort of like learned about it just a couple weeks ago, and some wallets broke integration with all the open wallets to be able to defend themselves from these attack. So, but we found some clever ways of sort of sorting that out, where we started storing now a few UTXOs, well, parts of them, and hash of transactions and amounts, and then we sort of like do some checking so that you can't really get robbed. So that's on that attack. Another cool thing is the BIP85. And if you want to go to the next to the BIP85 screen, it's the blog post. So BIP85 was written by Ethan quite a while ago, but I think he never got a number for the BIP for a while, or it was just sitting there for a while. I can't remember now. But so if you scroll down to BIP85, so what's really cool about this BIP is that you can derive new seeds from a seed, and it's actually hardened. So what you could do is, say, for example, you have, everybody downloads phone wallets, and it's a pain in the ass to back up like 50 different seeds for 50 different phone wallets that you want to try. And each of those, you're never really going to put a lot of money because it's a phone wallet, right? So what this BIP allows you to do with ColdCard is you can generate new seeds for those wallets, but you only have to back up one seed. So one seed to essentially rule them all. I still don't recommend mixing your deep cold HODL with your BIP85 derivation seed. It's good practice to sort of keep like good sanitation, good hygiene around seeds. However, you can have this other seed where you derive all these other seeds. And this should help a lot of noobs without like sort of exposing them to making too many backups where everybody messes up, right? You can have like one metal backup plate where you have one seed to make the other seeds, and then you have another backup plate with your really cold stuff.
Cool. All right.
We're gonna cover the metal plates on our next show, which is another product you guys are
Yeah.
Oh, question for you. How much memory does like keeping the UTXO stuff on the ColdCard take up? I know you don't have that much on
yeah, so we have very limited memory. So we don't keep full UTXOs, right? So we're keeping, I think, 32 bytes of UTXOs and 64 bytes of transaction amounts. What's really, really cool is that transaction amounts are fairly unique as well, right? So
it can be. I mean, you could have round amounts too.
Sure,
right? Like,
sure. Yeah. But when you add all those heuristics together, right? You have the 32 bits of the UTXOs, you have the amounts. We keep about, I want to say, I think 30 transactions and 124 UTXOs, maybe. I can't remember now. I need to double check. But it's enough for essentially most people who could be vulnerable to this.
Wait, so you said 32 bits or 32 bytes?
32 bits.
Wow. So okay, I have questions for you regarding like grinding attacks and stuff like that. If you're storing them that way, but we'll talk about that some other time.
Yeah, for sure.
I do want to start another podcast series, like I need another one, but I do want to start the Understanding Bitcoin podcast series where you're free to nerd out as much as possible on this stuff.
For sure.
With regard to BIP85, I just took a look at it right before, but essentially what it's doing is you have one master seed, and then any child key, you're able to create a mnemonic off of that. Is that what it is? Okay.
Yes, exactly.
That's all it is. Okay.
It's and then like you just put it on the thing and you're done. It's amazing.
So you have one seed to rule them all, and they can generate additional seeds that you can put into other wallets. That makes sense. I should use that for testing.
Yeah. Oh, sorry, I forgot this. So because we have so many advanced features, we've actually commissioned Kiss B, Keep It Simple Bitcoin, He makes awesome videos, and now you can get some. We're slowly rolling them out. There's about like 20 or 30 of them coming. Just explaining each feature and how to use it, and some of those should be able to explain people some of the bips and stuff. So it should be a good source of education.
Okay.
All right, so with that, I'm going to go on to the first story we have here. Some abnormal Ethereum transaction fees were on the trail. So China reported claims a hacking crypto exchange is behind 3 abnormal multi-million Ethereum fees. All right, so since the past few days, certain and rather strange transactions are stirring up debate in the Ethereum community. Data shows someone, an entity or individual, spent millions in transactions fees for just a few $100s in actual transfer, a rare seen occurrence. So the first one came earlier this week on June 10th, when reports stated someone accidentally fat-fingered millions of dollars by presumably mistaking the transaction fees and transfer values. So that was about, over 10,000 Ethereum paid as a transaction fee. Yikes. The second came in an instance a day after the first on June 11th. The transaction was exactly the same as previously, even coming from the same address. This time, money laundering concerns increased, with some added chatter of an exchange, whale, or crypto fund possibly held at ransom. Then came the third. Dovey Wan of Primitive Ventures tweeting, wow, another abnormal Ethereum transaction with over 2,000 Ethereum fees just emerged following the previous 2 instances, each with over 10,000 Ethereum fees. So we see the transaction there. So there is this theory that pointed out by Vitalik that maybe someone was hacked, with his analysis of the matter citing a report by a Chinese blockchain analytics company that seemed to confirm the hacking allegations. So he's tweeting out here, so the $1 million transaction fees may actually be blackmail. The theory: hackers captured partial access to exchange key. They can't withdraw, but can send no effect transactions with any gas price. So they threaten to burn all funds via transaction fees unless compensated. A local Chinese firm called PeckShield claimed hackers have indeed gained access to the funds of an unnamed exchange and are able to transfer to accounts marked reliable, not their own. Okay, Jimmy, this is crazy. What are your thoughts on this new weird transaction and Vitalik's suggestion that it could be blackmail?
Yeah, so we covered some of this a week ago about these weird transactions coming from the same address. We are speculating that it might have something to do with a particular type of smart contract, possibly something on DeFi that it was trying to manipulate. But this theory, I think, actually could make more sense. So first of all, it is possible in Ethereum, because of their really complicated smart contract language, that you can have partial access to some keys and be allowed to do certain things but not others. So withdrawing might require one key, but being able to pay a small amount and have burn a ton on gas is something that supposedly you could kind of do. Which is obviously terrible, because the hacker was able to send millions of dollars worth of Ethereum just to the miners as a way to basically ransom the fact that they have the exchange key. But that in itself is it just kind of shows you that the security around Solidity, the Ethereum smart contract language, is kind of terrible. They couldn't figure out this kind of obvious scenario that you can do. As far as what the actual hacker is doing, my guess is that if this is what's actually happening, that there were some negotiations, but the exchange was like, prove it, and they were like, okay, we're gonna prove it, and here's millions of dollars that you're just going to lose right now, and we're gonna do more of it, and they've done it 2 more times now. this makes sense to me. It does pass more of the sniff test. But yeah, I mean, this is why you shouldn't be supporting Ethereum or doing any custom Ethereum smart contract coding or whatever, because this the kind of crap that can happen.
Yeah, so I got a question for you, Jimmy, and I guess Rodolfo can weigh in on this as well. How is it possible that you can't withdraw the money to yourself, but you can send $1 million transaction fee? Isn't that like just terrible coding by an exchange to allow you to create such a large transaction fee?
Yeah, it's just bad software. That's exactly what it is. The thing is, Solidity makes it so easy to make really bad smart contracts and really bad software, and this is what you get. This is the kind of crap that you get, and that's what's happening.
It's you know, the rule should be you should never let JavaScript people handle money. No, it's like, you know, it's like, it's a fine thing to build web applications and to do whatever, but like when you're handling money, like, it's not like the language has, you know, like a ton of problems with itself because of that, but it's also sort of like the mentality of breaking things and sort of like, you know, lots of libraries and node install everything. And it's just that, like, you can't handle money like that. You're going to lose money, right? This is not, you're not making pop-ups on a website.
Yeah, and that's exactly what's happened, is that they've lost a lot of money as a result.
Oh, right. Well, because pop-ups on a website are usually designed to make people lose money.
Exactly. That's a great analogy. The Ethereum was designed to make people lose money.
They're as annoying as pop unders, if you remember those, right? Like,
oh wow, yes, yeah, those were some.
That's what Ethereum is. It's the pop under of the crypto world, basically.
Yep. Indeed. Sorry. Yeah, go ahead.
Yeah. Speaking of hacks, our next story is a summary report from the Ontario Securities Commission on a Canadian exchange, QuadrigaCX, that was just found to be a massive Ponzi scheme. In this executive report, it's pretty, it's just incredible. The downfall of crypto asset trading platform QuadrigaCX resulted from a fraud committed by Quadriga's co-founder and CEO, Gerald Cotton. Just a summary of this report, what he was basically doing was he created this Canadian exchange for Bitcoin. It was one of the only ones, it was in the early, like, I don't know, 2012-ish time period. And he was basically creating trading volume by using fake accounts to trade with people. And then when the price of Bitcoin exploded, and he was shorting and doing all sorts of trades with fake accounts, when people tried to take away their money, he basically didn't have it. And he kept using funds that were funded with the funded accounts to furnish his personal lifestyle. He was putting it in payment processors because no banks would take the money. I mean, it was just incredible fraud. Rodolfo, you're from Canada, so give us your take on this story when it first hit, and what you've seen from Quadriga.
So it's kind of interesting because, so there was this company called, I believe, CA Vertex, which was one of the first sort of Canadian exchanges, a little bit more size. And they were sort of like failing. They got, I think, hacked as well. And then I believe Quadriga bought them or bought the customer list from them. That might have been 2013, 2014. Can't remember. Around that time. And this guy, Gerald, right, sort of shows up. It looks about like, I don't know, maybe like a half decent you know, for what exchanges looked like at that time. And this guy was smooth, right? Like, I mean, you know, from the rest of the people that used to be in the space, I mean, this guy was a little bit, he sounded more legit. I think, at least, I don't know if they had or they claimed to have like lots of like MSB licenses and things like that. And I always sort of like, I traded with, did I trade them? No. I think we actually used them to sell some companies BTC to, like, you know, pay for inventory or whatever back then. And you know, you always went through. But I always sort of like heard rumors. There were always rumors about shady stuff. And every time you got a deposit to the bank account from these guys, it would come from some weird business name, you know, like it was never sort of like Quadriga, right? It was always like, I don't know, something else, which was always a bit of a red flag. But, you know, you never know. People have banking issues. And, but one thing was clear to most people that sort of like, you know, heard the rumors, is just never leave money there, right? Just in case these guys disappear. And lo and behold, I mean, you know, like the guy does an exit scam. But I don't think I had an idea of how deep the problem was. I mean, like the guy was essentially like trading and spending all customer funds. There was like zero accountability. The best one is like, if everyone have a chance, go on Twitter and search for the pictures of cash in his house. There's like piles of cash on the table, on the stove. It is the weirdest thing. But yeah, I mean, like, this is fascinating. It's
there's
I
some
actually
pictures here.
Oh, there
I'll
you go.
show you. There's one.
Look at that. It's like a drug dealer. I did, like, a lot of people lost money on Quadriga. I personally know a few who did. Yeah, very, very sad story as usual with exchanges. It seemed to be, at least it seems to be getting better. We seem to be less exchanges dying out.
Well, I also know several people who lost tens of thousands of dollars on Quadriga, family members and such. But one current ongoing refrain from people was, well, this is a Canadian company and it's the biggest, most like trusted exchange. So of course we should trust it. And it just blows my mind that, I don't know, something like the Ontario Securities Commission couldn't just hunker down on a company like this and say, hey, what's going on here? But the Quadriga said our business model doesn't have anything to do with securities, so we don't need to follow any form of compliance. So,
well, I mean, I don't disagree with the, like, I mean, you know, I really wish there would be a lot less bullshit around regulation in this stuff. You know, ideally, some of these things would be on reputation base. I think the licensing and all this regulation stuff actually murkies things, because remember, right, criminals don't follow the law. So just because you say these guys have to follow the law and follow some form of compliance or something, it doesn't mean they won't sort of exit scam just before they get audited, right? So it's not like the regulation would have helped much, in my opinion. But yeah, I mean, you know, criminals gonna be criminals.
Yeah, what blows my mind is he basically, when things were in trouble and the company base had no assets left and couldn't keep up with all the withdrawals, the guy goes on a honeymoon to India and dies.
Yeah, I mean, seriously, right? I don't know, like, so my very out there theories, right? So one is, this guy did business with very bad people, right? Because remember, right, like, nobody has millions of dollars in hand unaccounted for from nowhere, right? So this guy did business with wrong people, and, you know, they sort of cleaned out the house with this guy in India there. And the other one, of course, right? I mean, this guy just ran away and the body was fake or whatever. I mean, the idea of this guy sort of just spontaneously dying in India off of a stomach issue, and then the body immediately being, I think the body was incinerated with no autopsy. I mean, come on, right? You can't make this shit up on a movie.
Yeah, we're waiting for the movie. Tone, why don't you weigh in? I know you're not fond of exchanges.
No, I'm not. And this has been happening forever, going back to Mt. Gox and probably even before Mt. Gox. But Mt. Gox was around the time when I came into the space. Rodolfo and Jimmy have been there for years before me. And yeah, this keeps happening. This is why I don't trust my Bitcoin to any third parties. This is why I prefer keeping them on something like a ColdCard, where my funds are actually safe. That it's a good question, Rodolfo, and Jimmy and I will probably debate this all day. If we like, would regulation have helped? And again, a lot of people call me a statist for the following statement, because I do believe in regulation when it comes to people being accountable for other people's money. I mean, I don't want to be regulated for choosing where I put my money or where I do with the money. But the moment I hand over my money to someone else, I want that person, their company, their products to be regulated to the point to make sure that my money is actually safe. Now, we can debate whether the regulators do a good job or not, but that is a job. And this is one of my issues with the anarchist and libertarian movement, where to them, the free market resolves this problem by everyone losing hundreds of millions of dollars. And then hopefully the next exchange you have your money in will not scam you. And this is where I disagree. I'm not saying the regulators do a good job, but that job is necessary to make sure that the Ponzi scheme of Quadriga doesn't happen, or at least, found about early enough. There's also an issue of very often after these things blow up, you find out about the insane, crazy criminal history of the founders of the company. This is also something that should be, looked into before this company actually is founded. So I'll hand it off to Jimmy from here, but that's just my view on this.
Yeah, I'll show this graph here. You could see here where the funds were held by Quadriga. A lot of it was in this blue area, funds held by payment processors because no banks would take it. He also started just putting the money into other trading platforms and trading with it in a series of terrible trades. And on Quadriga initially said that they had cold wallet storage. And you can see this tiny thin layer of indigo or deep aquamarine or whatever is where they put it in cold storage, and hot wallets in that gray. Jimmy, your take on this?
Well, first of all, like this, as Rodolfo and Tone have said, like this has been happening forever. And this is like Mt. Gox version like 17 or something like that. The guy basically took the money and traded against his own users, got wrecked, and basically lost a lot of the money. And he's been doing lots of shady things. The warning signs were all there. That's the key thing. And I'd like to disagree with Tone with regard to regulators, because generally government officials are terrible at their jobs. If you want something that's certified, I think that there's room for that. But usually it's a lot better if you have a private company that certifies and says, we're going to put our reputation on the line and we're going to have some sort of profit and loss as a result of certifying that this exchange is legit, instead of having government regulators who are often bribed anyway, in saying, oh, okay, this exchange is okay, and then end up bailing them out when they don't come through. I mean, this is very much in the Wild West days of crypto, right? And this is not dissimilar to something like a Wild West Wildcat Bank back in the day, when anyone could basically open up a bank, and it became more regulated by government. I think the better way would have been regulated by an industry, like a private company that could say, okay, this company is actually doing something that we think is legitimate. We're auditing their books, and you can have multiple such things. And there are lots of industry, sort of self-regulation like that happens in all sorts of industries. I think that would be a lot more efficient than having government say, you have to do it this way. You have to follow these ridiculous regulations that don't make any sense for this particular industry, because that's what the politicians want to do, because they don't understand anything about this particular thing. So that's my particular take. It's not very different than what banks were doing, and they essentially had a bank run and they collapsed. This was the situation with every bank in the United States and around the world up until 1971, when we got off the gold standard, basically.
So, quick note. I think what Jimmy said is exactly it. It's like what regulation does is gives people a false sense of security and increases cost. The cost of handling money in the West is insane. It's completely out of whack. Like how much banking costs, how much everything costs because of this regulation, right? And you end up losing more as a whole that way. If you have reputation, and you already have property rights, somebody robs from you, they go to jail theoretically, or they have to pay you back, right? So it's not going to change any of that. I think if you have a market base there, the bad actors are going to get punished by the market, right? Instead of getting a bailout. So I just think we're way too off in this sort of regulation way, and I don't think that will probably change ever.
Oh, very, very, very quick last comment. Yeah, you're right, Rodolfo. If someone does rob you, they do go to jail, but that's a very long and slow process. Potentially due to government as well, as Jimmy would say, yeah. But it is a slow process. I just want to add to the fact that, a lot of people in this space always talk about, well, why are you mean to these companies? Why are you mean to these projects? We all need to get along. And this is an example of why you can't be nice to every single other company and project in your space. Because by other exchanges being nice to Quadriga and not wanting to, ruffle the feathers or whatever that statement is, if you are a competitor of Quadriga and you knew they were doing something shady and you didn't say anything, you deserve the shit that's gonna come down on you from the regulators that will now see you as no different than Quadriga. So this is, again, a call to the crypto space that kind of I hate this phrase because it usually comes from the government. If you see something, say something. And that's what this channel has been doing. Every time we see or smell something wrong, we say it, even though a lot of people don't like it.
It's but that has nothing to do with government, right? If you see something, you tell everybody and they don't get screwed. It doesn't have to do with government.
Right? No. I'm just saying, like in the U.S., especially in New York, it's like something that's all over the train stations. It's kind of like the government's way of you snitching on everyone else. So I just don't like the connotation of that phrase, but the idea of that phrase is correct. See something, say something. But the way it's advertised in major cities is more for snitching purposes on your fellow man.
So it kind of sucks because it does expose you to a lot of attack, especially from the people that you're quote unquote snitching on. That's a giant security risk, is that when you say something about somebody, they're not going to be happy about it, and they're probably going to come after you in some way. So the incentives are actually pretty terrible, and having some sort of way to anonymously sort of talk about that would, unfortunately, stuff like WikiLeaks is, frowned upon by everybody for that reason. But that's the way in which this stuff ought to happen. Is evidence needs to go to some sort of anonymous place in order to not expose people to these security risks that they have to take in order to call out bad actors like Quadriga.
I feel like there should be some sort of transparency or accountability holding with these exchanges. I we'll point out this other graph that I liked in the report. It shows that in the early, or in 2013, when the exchange got off the ground, you see the green, that's Gerald Cotton's trading volume. So it was basically all him in the beginning.
So he used to trade against you, or somebody was, it was so obvious. Every time I was trying to sell BTC there for the company, you could see it. Somebody was literally trading against you with knowledge of how much you're going to put.
It's the Willy bot all over again, only a little more advanced because it's been a few years.
Well, Willy bot was trying to pump the price. This is literally trading against you. Like,
yeah,
it's highly illegal.
Buying or selling, right? It had nothing to do with the price. You could see the orders were ridiculous. Like,
they're running your trades, basically, right?
Yeah, it was absurd.
Yeah. All right. I want to move on to we could talk about this for the whole day, I know. But for the interest of time keeping, I'm going to move on to the next story. And we've got here, is 3 billion new Tether too much? Where is the money held? So we've got a tweet here. Recently, we decided to look at USDT Tether, an entity that consistently outdoes itself with the level of rampant fraud that perpetrated by them in the blockchain space. Specifically, we want to look at the troubling number of Tether tokens that have been minted over the past 2 months. Specifically from mid-April to mid-May, just 1 month, over 3 billion tokens were minted. Perhaps even more troubling is the fact that over 124 to 48 hours span, we saw the supply of USDT increase by 2.5 billion. Yes, billion, you read that correctly. Without providing rhyme or reason, nor being pressured to by the mainstream blockchain elites to do so, skepticism of USDT has waned substantially in the blockchain space. But is this to everyone's detriment? So, Tone, do you want to take this off?
Yeah, sure. Jimmy and I have been, talking about Tether for a while. We did that one show with Bitfinex on Jimmy's channel. I'm going to try to bring Bitfinex on my channel one of these days as well. Speaking of, like you said earlier, Jimmy, this transitions well. There should be more, these anonymous means of pointing out potential fraud. Now, once again, I don't know if there is or isn't any fraud going on in USDT and Tether. And this has been the consistent position of this show, is that we don't know. It's like a lot of people are very upset when we say we don't know. People that think Tether is an outright scam are mad that we are not taking their position. And people that think that Tether is fully legit are mad that we're not taking their position. And the New York Attorney General is on the case looking to figure that out. What we do know is that 25% of all Tether is not backed by any US dollars. And there is lots of questions as to why that happened. Either Bitcoin was hacked from that company. I forgot what it was. Bitcoin. I don't remember what it was. But I'm not sure why Tether even had Bitcoin, because they're not supposed to be touching Bitcoin. They're supposed to be taking US dollars, putting them in a bank, creating Tether backed by those dollars, sending those Tether to Bitfinex because they own Tether, and then people withdraw. Since they can't withdraw any money from Bitfinex, they withdraw the Tether. So I'm not sure how Tether exactly is touching Bitcoin as a company. Also, they claim that some of that fiat was confiscated. But if they did print, 3 billion worth of Tether in a few months, like, where is that fiat? Like, what bank is is holding that for them? I mean, this is a lot of money. And Tether is now number 3 on the coin market cap chart. And at this pace, it's not going to take long for it to be above Ethereum. And this is a little bit of a risk because so many people trust Tether to the point of holding hundreds of millions of dollars in Tether. I just think it's growing a little too big, and it's starting to be in that too big to fail category. But in crypto, we know there's nothing that's too big to fail. So I want to hand it off to Jimmy here to throw his thoughts in.
Yeah, this is a very like Tether's always been a little bit strange, but from what I've been hearing, Tether has enormous demand in China, and we know that a lot of those people want to move to the dollar because they're not so sure about the yuan or renminbi, and you know, rather than take on sort of currency risk by keeping it in their own currency. Tether is a relatively affordable way to get into the dollar without necessarily having a US bank account or something like that, which is what you would need in order to do that. But at the same time, I think there is something to this story in the sense that there's a lot of systemic risk being put into this one particular asset. And we don't know the risks of this asset. We think it might be fractionally reserved, lended, or something like that. If it's backed by like 75 cents on the dollar, that's obviously a lot better than any U.S. bank or any fiat bank anywhere. But it's still kind of a little bit of a risk. And I mean, maybe not even a little bit. It might be a large risk. We just don't really know because we don't know who provides them banking services. We don't know what account has these billions of dollars. We don't know what the conversion process for withdrawing actual US dollars from Tether is like. And the fact that it keeps going up and very rarely goes down. And usually, like when you get a bump in Tether, that means a bump in Bitcoin is coming. That's been the case for the last few months. So I'm not surprised at the volume of money that's coming into Tether, especially from China. But at the same time, like would I keep money in Tether? No. But then again, I'm a U.S. citizen, so I have access to U.S. banking services. So it's not a big deal. I don't need Tether. I don't need to keep money in something other than that. This is where stuff like Libra or something like that would be maybe a little more helpful and take a lot of this sort of like risk away from this particular currency. But then again, Libra is probably not getting off the ground for many reasons. So
wait, Jimmy, I heard Libra is off the ground in Brazil and it's already like functioning, but I'm not sure. But
yeah, so one of the things
the Brazilian.
Yeah, one of the things that happened with Libra is that I think they're doing it per locality. So you can't necessarily buy USD Libra in China, which is what they would need. It's kind of unfortunate in that way. But I'd be curious to hear from Rodolfo whether or not they're using it in Brazil or not.
I haven't really asked. Like I don't know. I could ask around. Yeah, I mean the Tether thing is interesting, right? Because I think you nailed there. I mean, like this guy still would have a lot more less fractional than banks in North America do. I think Canada, like they don't even have to keep 1% in the balance sheet. So sounds like Libra might be a little. Sorry, Libra. Tether.
Can I push back on that statement? Technically, this US dollars are at a bank, so who knows what they're doing with it, right?
Yeah, that's right. It's even worse.
It's a fractional reserve on top of a fractional
that's
reserve.
Right. Yeah. If I understood right, those guys are banking like in like pretty much like in a ton of countries, right? And they have like many different sort of amounts per bank. Well, due to regulation, again, it probably makes it impossible for them to release all the details, even if they wanted to, of all that stuff. So it's tricky. I wish some of these were actually backed by, I don't know, like some different assets, maybe a basket of assets, maybe a basket of currencies, kind of like a euro dollar kind of sorts. That to me would probably be safer, even if it's a little bit more volatile than just sort of like one currency. Because the U.S. government could say tomorrow that Tether cannot bank USD anymore, and it's over, right? So I would prefer if they would like de-risk this by just adding, making a basket of currencies or a basket of different assets.
But now we're back to Libra.
Yeah, I don't think you could ever really de-risk anything in fiat. That's the point.
There is that. It is fiat.
yeah, and that's the thing is whatever currency or basket or whatever you have, you're always going to have a lot of risk. And this is why, like Bitcoin. It's so certain, and you don't have to deal with all of this regulatory crap that you have to with Tether or any of these other ones. I mean, I know we're not going to cover this story, but one of the things that I put out in my newsletter is that Paxos dollar, like a large percentage of that is being used by the MMM global Ponzi scheme to cash out of Bitcoin, which is kind of crazy. But that's what an article that I reported on in my newsletter yesterday talked about, which is insane.
Can I just throw one last comment before we move on to the next story? I know we're running low on time. Is that here's what I will keep fighting when people say Tether is being printed to pump Bitcoin. Like I called it bullshit like all throughout 2017, and I continue to say that today, because if Tether was being printed to pump Bitcoin, why are we still more than 50% down from 2.5 years ago? So
it doesn't. If anything, it's the opposite. It provides liquidity. So Tether is literally a means for you to cash in Bitcoin tops, right? So Bitcoin tops a bit, you cash into Tether, so you don't have to go into bank account in the country you live in, so you don't pay taxes. That's what people use it for, right? So Tether literally keeps Bitcoin from pumping.
Right, and this is why my view is one of the biggest Bitcoin moon pumps that we can have is an implosion of Tether. Because as Tether is imploding, everyone will sell Tether 50 cents on the dollar, 25 cents on the dollar, and move it into Bitcoin. What else are you going to do with it? So the biggest Bitcoin pump will show up if there is a disruption in Tether.
Yeah. Go ahead, Jimmy.
Well, I mean, maybe that's how we get the Bitcoin market dominance to go up higher is by a lot of these. The same thing that you said, Tone, about Tether is true of every altcoin. Is that as they go bankrupt, the flight to safety is to Bitcoin.
Bitcoin is a settlement.
Yeah. So I mean, I don't know. That might be a way in which it might happen.
Right. And in that case, the speed of a Bitcoin transaction nor the Bitcoin fee will not matter at all.
Yeah. And just so people get a reality check too, it's like, it doesn't matter if Tether goes away. There's going to be another 30, stable coins of some sorts to replace it, right? Like the cat is out of the bag for stable coins. They're going to be here because they have actual useful purpose, right? We can disagree on the morality of it or the safety of it or whatever, but they're very useful. So I somebody's gonna keep on feeling that market, no matter what. It's the same with the shit coins, right? People are gonna use them to make more Bitcoin on top of the dumps, so it's just gonna keep on happening.
Just tying this with the Quadriga story, we saw that trust was built up in that exchange because of this fake trading volume created by the owner. And it seems that additionally, from LibraHash tweeting, additionally, if one were to take a look at the disparity between USD-based exchange traded volume and USDT-based exchange traded volume, it should become immediately clear that Tether's actions cannot be rooted in any genuine demand from anyone. And we see this photo, and it shows that at one point in April, the same month where Tether issued over 3 billion worth of USDT for their supply, Tether's traded volume accounted for nearly 20 times that of USDT. This metric makes absolutely no sense if Tether is to be seen as legitimate. So I'm just wondering, are they creating this? Is it the charge here that they're creating a false trading volume?
I think this Twitter accounts, like all of these that do Tether FUD, they're just reading charts and sort of coming out to conclusions, right? We don't know the demand outside of North America of this stuff. It's like very hard to know. And there is a ton of people outside of North America buying this stuff.
Yeah.
Well, I mean, China alone's like billions of people.
Right. So I can see those numbers being legit because we've seen regulated crypto exchanges like Grayscale, that's not Grayscale, sorry, Gemini and others, and they have no freaking volume. No one wants to trade crypto in the regulatory space. Everyone wants Quadriga.
Yeah.
Well, so they want that because they get leverage and they can do all of these more advanced things because they don't have to pay all of the regulatory costs of
More
you know,
the
getting
taxes.
100x,
Yeah, or the
right?
taxes, right? They
Yeah.
want to use Binance. It's like Bitcoin, Ethereum, Tether on Binance, right?
Yeah. So
That's
if you scroll down, Christine, to the end, there's a little bit of this is talking all about Pax, which is Paxos coin. This is another stable coin. But it turns out like a lot of the volume is driven by the MMM Ponzi scheme, which is cashing out their Bitcoins using Pax, which is kind of insane. But that's what this article is alleging. I don't know if it's true or not. Kind of weird because I used to work at Paxos, but yeah, that's I mean, this is what kind of happens is, you know, you allow for this. You know, there's this sort of semi-regulated thing like Pax, and it gets used in this particular way.
All right, let's go on to the next story. Investor claims there's no way to cash out from Grayscale's Bitcoin Trust. So an investor raised a major criticism about the way in which the Grayscale Bitcoin Trust is set up. This Chao Wang, investor analyst and head of product at crypto market data firm Messari, raised major criticism about the way in which the Grayscale Bitcoin Trust, or GBTC, is set up. In June, he tweeted, Wang cites Grayscale's official site, according to which Grayscale Bitcoin Trust does not currently operate a redemption program and may halt creations from time to time. He suggested that the absence of a redemption mechanism can result in GBTC trading at a discount compared to the net asset value, or NAV, of the fund's asset. You are just donating your money to Grayscale as the charge. Tone, what are your thoughts on this suspicious activity from this user?
Yeah, so this really seems like someone that's like upset that they put money into Grayscale, they bought the trust, and there is a lock-in period. I don't remember if it's 6 months or a year, but the Grayscale is a pretty regulated, GBTC and the Grayscale Investment Trust is a pretty regulated asset. So there's no like tricks there. So he seems to be upset that he didn't read the fine print of what he was investing in. Now, I was a critic myself of Grayscale in the early days, and I'm still a critic of Grayscale over their other practices with shitcoins, but not so much over the GBTC product itself. While I was a critic, those that watched this channel 3-4 years ago, probably closer to 4 years ago, would have seen me be a critic of GBTC itself, because I hate the fact that it has a premium. But no, you are not donating money to Grayscale. First of all, this thing always trades at a premium. It never trades at a discount. And the reason why it trades at a premium is because the demand is significantly high and there's no competition in the market. Is it possible for this product to trade at a discount? Of course it's possible. So here's what you do. Don't buy it if it trades at a discount, right? Because you are only buying the tradable shares on the pink sheets, which is like a penny stock. But once you go in, but they are holding that Bitcoin for you. And there's absolutely no reason for it to trade at a discount other than at like during certain panics, and it will only be for a very, very short term because it is fully backed by Bitcoin. So it's basically someone that invested in the trust and seems to be upset. And when it's time for you to sell the damn thing, you can actually get a premium because it trades on average at a 20% premium. And he's also confused. This is not an ETF. And that's what the article kind of says. He's confusing this with something like a GLD, which is a gold-backed ETF, which this isn't. And I agree with you with the person that's complaining. We need an ETF that is backed and that is redeemable, because that makes it a much more cleaner asset. But Barry Silbert did the best he could under the regulation that he could achieve. But if we go over to the pitch deck, Christine, which you were just on, and if you just go over to page 6, this is the page that, one up. Nope, that's 7 right there. Yes. If you want to zoom in on that maybe a little bit, which I find absolutely hilarious in that they clearly made some money on the Bitcoin investor product, and then decided to launch a bunch of shitcoin trusts. And one of them, they're actually charging a 3% annual management fee. That's the Ethereum Classic one, the one that's kind of Barry Silbert owns himself. It's the only one that's been profitable. So yeah, so I hope a lot of people listened to Barry Silbert and invested their life savings into these shit coins, and now they're learning their lesson as to what happens, and you can see it since inception. So this is the problem that I have with Grayscale, is that they're selling you basically horse manure at this point.
Jimmy, do you want to weigh in on this?
Yeah, absolutely. So I'm going to disagree with Tone just a little bit, in the sense that this is where what Rodolfo said earlier comes into play. Regulation gives people a false sense of security. In a sense, like it is possible for Grayscale Bitcoin to get hacked, right? Like if they lose all of their Bitcoins in some sort of internal hack where they lose all of their Bitcoins, your GBTC shares are completely gone. And in that sense, it would be kind of a donation to GBTC. So that said, I mean, like the reason why there's no redemption process necessarily is because there's a premium. Who's going to redeem for Bitcoin when you can get 20% more by just selling it for dollars and then go buying on some exchange somewhere? That's going to be a lot more profitable if you're going to do that art play. If there was a discount, then it would make sense that there wouldn't be a redemption vehicle. In fact, if it goes below parity, that would be a terrible signal that more or less would mean that they were hacked or that their assets were seized or something to that effect. But this is the case with anything where you're custodying your coins or trusting somebody else, is that really from a legal perspective, you are kind of, you have a claim on some of their assets, but it's essentially a loan to a particular company that's taking your money, and that is the case with GBTC as much as anything else. So I mean, it has a place because it does allow some people to get in. I don't think it's necessarily the way you should invest with Bitcoin unless you get certain tax advantages with like a 401k or a IRA account or something like that. But yeah, I mean, I would much more recommend people go buy your own Bitcoin and custody it yourself, so you could be your own bank instead of having to trust them.
I just want to jump in real quick before Adolfo goes. Well, Jimmy, yes, I can see your point on regulation creating a false sense of security, but at the same time, I'm not expecting Barry Silbert to go to India, come back with a body bag, and find out that GBTC was running a Ponzi scheme. Like there is, assurances here.
Yeah, so that's totally, like, that's one thing that it might help, right, to have that kind of regulation. But what's interesting to me is when you look at the contracts of some of these investments, right, you are last in line to take your cut if they go down as a creditor, which is essentially they figure out how to legally screw you, right? You look at the contracts, right? Like you're completely screwed just legally. So what's the difference? You're just increasing cost of running the business if you're going to get fucked anyways, right? What's the point? And just as a side note, this is too funny. I just saw this table. Look at that, the asset investments there. Look at the returns. So the trailing 12 months. So Bitcoin 54%, and then since inception 4,300%. And then look at all the other shit coins below.
Yeah.
Everything is just like, it's shit investments. Why do people buy this crap?
Well, it's because of this false sense of diversification or something like that.
Right.
But essentially what you guys are saying is correct. Though, like if Ethereum Classic goes to zero and everything, like all DCG does something, or if Barry's running some weird scam in the background, yeah, I mean, like, going to India and faking your own death is totally in the cards. I think I've said this about I've said this to Joe Lubin, right? Like, what happens to our bet if you're in prison at that time? There are real risks to doing this stuff. I'm sure Barry has good enough lawyers that he
Yes.
won't ever end up in prison. But I mean, there are real risks to all this, and we're in the midst of some societal upheaval. This is not a good time to be taking risks like that.
You know, Madoff had a very legal business.
All right. With that, I'm going to go to the mempool. We could take a look at what's going on with the transactions. Jimmy, you want to take it away?
Yeah, so it's been interesting. You saw over the weekend that basically there was like no volume, or I mean there wasn't like everything was clearing. I think over the last 2016 block epoch or difficulty adjustment period, I think something like 500 blocks were not full, which tells you that there's plenty of room, and you could have consolidated 1 sat per byte transactions if you wanted to over that time. But the difficulty did adjust. I think the last difficulty adjustment was somewhere around plus 14%. The one before that was like minus 9%. So we're up like 5-6% overall. But what that means is that there's fewer blocks coming in on a regular basis. So we're seeing a little bit of congestion. Yesterday had sort of the normal pattern during the working day. It went up to 20, 30, 40 sats per byte. Now, and it's the working day today, at least in the US. So what you're seeing is that it's a bit higher, but I expect this to clear overnight or get close to clearing overnight. By the weekend, it should be perfectly fine. But yeah, I mean, blocks are a little slower. Unless we have like a crazy price bump or something, I think you should be okay.
Awesome. And folks, we want to remember that Programming Bitcoin is available for you to buy. Learn all about how to program Bitcoin from scratch by Jimmy Song. We love learning all about Bitcoin and how to develop and program. And with that, I'm going to move on to Tone's price analysis. Stocks are rallying today. Each of the US major benchmarks are up over 1%. Bitcoin is getting a bit of a bump as well, just about 0.1%. Tone, take it away.
Yeah, what happened, man? It's down in the last hour since we've been doing the show.
Oh yeah, no, stocks and Bitcoin both turned. Rodolfo, if you have to get going, I'm gonna give you a chance to say goodbye.
Oh yeah. So yeah, well, nice being on the show. I just wanted to clear I said that the wrong amount of data, Jimmy. It's 15 bytes. It's a hash over the transaction hash, and a few other bits, and then there's 8 bytes from the exact Satoshi amount, all the way to the Satoshi. And yeah, anyways, guys, you can find me on Twitter. I gotta run, but ping me and if you have any questions about the stuff we make.
All right, cool. Thank you. And
Thanks, Rodolfo.
we'll be back with Rodolfo on the show sometime soon as well. All right, Jimmy, how was you gonna stick around for a minute?
I think for a minute, because what the hell's been happening over the last hour, man?
Yeah, so I'm going straight to the S&P 500. The S&P 500 really rallied. I mentioned in my group chat, I don't think I've ever seen such a giant move in the stock market, so close to the all-time high. So basically, this is a 1-hour graph of the stock market, and the stock market moved almost 8%. Pretty much 8%, 7.9%. The stock market with the futures markets moved 8%. Now, normally when a stock market moves up 8%, it tends to happen, let's say, after this candle right here. Like here's an example of the stock market in a 24-hour period moving 12%. But this is a lot more normal because we had just crashed 30%. This move up there is basically a move in the stock market of 8%, which is the 100-year historical annual average. But this is happening within a few percentage points of the all-time high. That is the insane part of this equation. So the markets are incredibly volatile, and it's crazy, completely crazy. I am still short in the S&P. I have not fully bought into this rally yet. The good news is I shorted the S&P at a higher price than it is right now. So my trade is not in danger. I shorted off of this daily 9, but my trade came close to being in trouble. And if we do close above 3150 today, I will probably cut that trade, that short trade on the S&P short. But at the moment, this is huge volatility, probably due to the Fed statements. I just don't see how the market can go to new highs, considering, I mean, you can gather and with like 8 million people to protest, but you still can't go and get a haircut or have your business open. So I just don't know what can possibly drive this market higher other than printed money. Now, the important part to the Bitcoin channel is the fact that Bitcoin is so correlated to the stock market that almost to the minute that if the stock market turns and goes down, so does Bitcoin. And to the minute that the stock market turns and goes up, so does Bitcoin. Right here, you can easily see, I'm just gonna go to the 1 hour chart, and we can see how on the 1 hour chart, Bitcoin made a top, made two tops. Bitcoin made a top late last night, and then it topped at 9 o'clock in the morning and New York time, and it turned down. Let's go over to the S&P. Let's go to the 1 hour chart. Where did the S&P top this morning? Well, what a surprise. It topped right at 9 a.m. as well. So here is the candle that ended at 8 a.m. There's a 9 a.m. candle. Now, late last night, where S&P bottomed at around 29.30, which was a lot further down. This is just last 2 nights ago. 2 a.m. S&P bottomed and started to go up. Let's go to Bitcoin and take a look. Here's the 1 hour chart. Nope, this is the 1 hour chart on Bitcoin. When did it bottom? Oh, what a surprise. It was also 2 a.m. So like literally Bitcoin and the S&P have been moving to the almost to the 10-minute mark of each other. That is insane correlation. Now, just because things are correlated doesn't mean they have the same amplitude. So what that means is the S&P could go and make a new high next week, but Bitcoin will not. It could also mean that the S&P could crash and go to a new low of below 2,000 points on the S&P, while at the same time, Bitcoin can hold the $6,000-$7,000 area. But I do expect them to move together. Usually when I wake up in the morning, I take a look at my phone and I take a look at the price of Bitcoin. And if I see that Bitcoin has gone up from the moment that I went to bed, I'm also expecting the S&P to have gone up from the moment that I went to bed. Or the opposite, if I happen to look at the S&P first, I kind of have an idea of what Bitcoin did. How long will this relationship continue? I think it can continue for quite a while. But just because they're correlated in the same direction doesn't mean that they are going to be correlated in amplitude. And amplitude is definitely going to switch. I want to take a look at gold. I have no idea if gold is up or down. Gold continues to consolidate, which again is strange. Usually when the S&P rallies, gold would drop. When gold rallies, S&P drops. Gold has held steady and is up slightly. I still think gold will break out of this consolidation to the upside and challenge new all-time highs. I am still skeptical on S&P going to new all-time highs. I've been a public figure for the last 5 years, and this is the first time I've been a straight up bear on the S&P 500. First time in 5 years. I have always been positive on the S&P 500 that is going to go to new highs, but not in the current environment. So, of course, if we do break the high, by the way, we no longer have to break the all-time high for me to change my mind. If we break last week's high, I will probably no longer be a bear in the S&P 500. This is enough of a dip. It's like maybe not enough, but in this world where Fed is announcing that they're gonna, buy everything and the kitchen sink in order to prop up the market, I will be back to being a bull of the S&P 500 if we break last week's highs. I do not, just like I did not expect this rally to break the prior swing high, I do not expect the current rally over the last 2 days to break last week's high. Now, what does that mean for Bitcoin? That generally means that Bitcoin is going to struggle. If I go back to the 4-hour chart, that's not actually going to help much. But if I go to the daily chart, yes, we are still in this triangle. Yes, Bitcoin can break out above 10,000, but only if the S&P breaks out above last week's high. If the S&P is not breaking out above last week's high, then I will stick to the larger scale trend of the rejection of the trend line, the 9 right here, the rejection of the trend line. The 1 to 4 candle correction may have already played out, but this bounce in Bitcoin is 100% dependent on the bounce in the S&P. Because trust me, Bitcoin is not driving the price of the stock market. The stock market is driving the price of Bitcoin. It's kind of like the debate, does mining hash rate drive price, or does price drive hash rate? Price drives hash rate. It's crazy to make the opposite argument. It's the same thing here. I'm making the argument that Bitcoin drives the S&P 500 is insane. So just like I expect the S&P 500 to turn back down later this week and into next week, most likely that will happen to the S&P 500. The Bitcoin is pretty much a subsidiary of the stock market right now when it comes to its direction. So S&P goes higher, we can see a breakout in Bitcoin. All right, that's pretty much, that's the short version. I may do another podcast later today for the longer version, or tomorrow morning. No news show tomorrow morning, so maybe I'll just bring you the price tomorrow. Jimmy, Christina, unless you guys have questions.
Oh, well, Federal Reserve Chairman Jerome Powell was speaking earlier. He said that they would adjust their corporate bond buying based on market conditions, and they didn't want to run through the bond market like an elephant. And so that may have been a little disappointing to investors who wanted more stronger language from Powell, a more active strategy. So we saw stocks fall from their previous high earlier this morning. So that explains that. But otherwise, it's the markets have been crazy.
I mean, clearly investing is now dependent on how much money the Fed is printing and buying stuff, and no more independent thinking of what are actually good, valuable assets. It's all like, wait a minute, so you're not going to run through the bond market like an elephant? That's a problem.
So I have a separate question for you. So Hertz is apparently in bankruptcy proceedings, and their stock is trading like crazy. And you know, it's going up because people are just sort of trading it for fun.
And they basically told people that do not, like, if you're investing in our stock, common stockholders will not get their money back.
Yeah, because there's so much demand for Hertz stock, they've decided to do a secondary offering in bankruptcy as a way to supply more stock into this very weird situation. I mean, do you see the S&P 500 essentially doing something similar? Because the fundamentals don't seem to matter, Toad.
No, I mean, like, look, and Jimmy's you're gonna hate me for this comment. The SEC is gonna step in. The way the SEC stepped in and like canceled all trading of the fake Zoom ticker, but the fake Zoom ticker was trading for like 6 months, so they weren't exactly quick to it. But it was like a penny stock that was worth less than a penny that was at one point trading at like $20 because people thought it was Zoom. So eventually the SEC is going to step in and prevent all future companies that are bankrupt to issue additional shares for Robinhood users.
Robinhood millennials. We're driving the rally.
The $1,200 checks are going, I guess. What other explanation is there?
Look, there isn't. I mean, people are going to learn their lessons. I was trying to find this article that I read years and years and years ago of what I don't know if I'll ever be able to find it, of what happened in the 1920s. The 1920s, basically known as the Roaring 20s, the Raging 20s, Roaring 20s. I don't remember the exact phrasing, but that's what happened. Like every 19-year-old and 20-year-old was investing in the stock along with the professionals, and everyone was just buying them up. And there were like these like really horrible stories. Like this one article that I read, there was this one like pianist. She was like one of the top musicians, like upcoming, like a prodigy child musician, and she was given like $1 million back then to pursue her career as a musician, like a classical musician, and then she was like 19 or 20, and instead of using that money for what do you call it, for like the top schools and advance her career, she gambled it away at the stock market and never got her career. There's so many stories like that. If you start reading the 1920s, this is what it's starting to feel like. Now, I've always said in prior podcasts years ago, even back with Tyler Jenks, that I anticipated a 1920s style stock market pump into new all-time highs, like for the market to double and triple before the ultimate collapse in a decade from now. But I didn't think it would happen off the back end of a global shutdown. Like, I kind of saw it as I didn't anticipate. Obviously, I didn't know the coronavirus would shut down the world. I did anticipate this kind of FOMO into the market, but even I didn't think it would happen in a world where the government is printing money for people and telling them not to have their businesses open, and they'll make more money on unemployment than if they go to work. So I didn't see that part coming. And I still think that the economics of the current environment should prevail, and that's why I'm a bear. And maybe being a bear right now in the stock market is the bad call. Maybe it's like the Ethereum pump, where we all know it's stupid, but then it goes from, after the Dow hack, when it crashed from $20 to $5, and the next thing you know, it's $1,600 because of stupidity. So this can certainly happen, and this is why the moment the stock market breaks last week's high, I'm no longer a bear in the stock market. I will have to buy into the FOMO, and I will now compare this to the raging 20s. Instead of comparing it to the 1930s, I'm going to be comparing it to the 1920s, where this printed money is just going to pump the market with no fundamentals whatsoever. And the stories out of the stock market are really depressing. And back then, people were different. And there's like these reports, like these like multi-billionaire, and I mean not billionaires, millionaires. But at the time, $1 million would actually be almost like $1 billion today. These millionaires that lost so much, it's like there's pictures of them standing in their like 3-piece suits because they haven't sold the suits yet, basically selling apples on the side of the road. That's what happened at the end of the 1920s after the stock market crashed. But before we can get there, there needs to be a market pump. I would not have thought that it would happen in this current environment, but it might just be.
Fascinating analysis. All right. Well, that ends this edition of Bitcoin Brief this Tuesday, June 16th. Thanks for joining us. Thank you, Tone Vays, our Bitcoin trader and educator, as well as Jimmy Song, our Bitcoin programming expert. And I'm Christine, New York-based journalist.
You have the one to ask. The song is done. Tone, you.
See you on the next one.